The U.S. stock market is the largest in the world and represents over 60% of the world's market capitalization, while the Canadian stock market is less than 5%. We have always believed that maintaining exposure to the U.S. stocks can be beneficial over the long term for our clients. When investing in foreign companies, such as those based in the United States, or holding foreign currencies like the U.S. dollar, fluctuations in exchange rates can affect returns when measured in local currency. For a Canadian investor that holds U.S. stocks, which are priced in U.S. dollars, an increase in the U.S. dollar compared with the Canadian dollar would produce a currency gain within their portfolio. When the U.S. dollar declines in value compared to the Canadian dollar, a currency loss can occur. As portfolio managers, we manage this foreign currency exposure for our clients by tracking currency movements in addition to stock fundamentals. Knowing when to buy or sell a currency can be a positive portfolio contributor and a way to manage risk. One accessible data point for tracking currency movements is the daily mid-rate published by institutions like the Bank of Canada. The mid-rate shows the average between what the bank is willing to purchase U.S. dollars for, referred to as the bid price, and what the bank is willing to sell U.S. dollars for, referred to as the ask price. The difference between the bid and ask price is referred to as the spread. Using both the bid and ask rates help when determining individual buy and sell trade decisions and conversion decisions. We track the Canada-US exchange rate relative to historical ranges to stay aware of high and low points and to understand trends that affect our portfolio holdings. Being aware of high or low points in comparison to history and what's happening in the global macro landscape can help guide both tactical and strategic decisions. The Greenard Group has historically allocated and will continue to allocate a significant portion of the Greenard Group model portfolios to U.S. companies. Many U.S. companies have historically demonstrated strong profitability. An added benefit has been the long-term historical trend of the U.S. dollar outperforming the Canadian dollar. This point should not be overlooked and has been a positive portfolio contributor for our clients over the long term. Our clients, as Canadian investors holding U.S. dollar-denominated stocks, have realized the dual benefit of appreciating stock prices of our U.S. company holdings and an appreciating U.S. dollar versus the Canadian dollar. From a diversification perspective, holding multiple currencies within the Greenard Group model portfolios has been a boom for the risk management. The U.S. dollar, as the world's reserve currency, is treated as a flight-to-safety asset during periods of market uncertainty and volatility. During these time periods, the U.S. dollar will appreciate relative to many other major currencies, such as the Canadian dollar, and this will provide additional risk management and portfolio protection for our Canadian investor clients. The Greenard Group prefers to settle U.S.-denominated trades on the U.S. side of accounts. This means that when you get your investment statements for one investment account, you will see a Canadian statement with the Canadian dollar-denominated holdings and a U.S. statement with the U.S. dollar-denominated holdings. When the investments are put on the U.S. side, all dividends paid are also paid in U.S. dollars. When a position is sold on the U.S. side, the proceeds are left in U.S. dollars with no conversions. For the most part, once our clients accumulate U.S. dollars, we maintain the U.S. dollars to avoid currency conversion charges. If you like this video, you can discover more videos in the Greenard Exchange section of our website. You can also read both past and current articles in the Greenard Index section. Thanks for listening.